Hey everybody, Joshua Phillips here with Churchill Mortgage. It is April the 11th, and boy, it has been a doozy of a week. Sending this market update out for not only myself, but my wife Amy, and we've got a lot of news going on. As you all know, I'm sure you're seeing your stock portfolio go down and just all the craziness. But boy, this has been a wild week for mortgage rates. And unfortunately, it is not good news. Just a sneak peek on that. So, as we always do, we're going to start out with some CNBC headlines here. This one just came out this afternoon. Mortgage rates surge over 7% as tariffs hit the bond market. Yikes. So this is saying, pretty accurately, mortgage rates about 7.1%. That's up a lot from a week ago. And we've seen a significant change in the markets. Let's see here. So let's go to this article here on the 10-year treasury yield. So I often talk about that if you want to keep an eye on what mortgage rates are doing, watch the 10-year treasury yield. We want to see it going down, but right now it's actually going up. So this headline here, 10-year treasury yield tops 4.5% after surge this week. So, and if we go over here just to confirm all the information, we can go to the bonds right here and we can look at the 10-year treasury yield. And boy, it's about at 4.5%. Now, a week ago, if you look here, a week ago, we actually saw dip down to about 3.9%, which is great. Mortgage rates were improving. Last Friday's market update, I said that last Friday was the best day of the year so far for mortgage rates. Well, we've pretty much erased all those gains that we've had so far this year, at least for the moment. So let's flip over here to mortgage-backed security charge. So as I always say, every professional loan officer in America has this chart up on their screen every day. This is mortgage-backed security charts. All you really need to know to read this chart is that green is good, red is bad, and the higher the security price, the better mortgage rates are doing. And if you follow these videos, then you've seen these week to week. So you can see here, it's been a lot of red. This red right here over this week represents mortgage rates moving up at least 0.5%, maybe as much as 0.75% over where we were just last Friday. And let's pull back here to a 1-year look. All right, so if we pull back to a 1-year look, you can see that we've fallen a long ways. We're not as bad as we were at the beginning of the year, not quite there yet, but we definitely got close today. And you know what? This tariff talk is breaking all the trends, all the markets. The reality is I have no idea where rates are going to go next. I certainly hope that things can settle down and that we'll see markets kind of bounce back to normal. Maybe we'll see mortgage rates get back to close to where they were last week, but really have no idea. It's a very precarious time right now. So if you're actively looking to buy a home, definitely want to be talking with us about where rates are, how that is affecting your mortgage payment. And this is kind of a day-to-day situation where we are seeing mortgage rates move around quite a bit. So what I quote you today may not be the same thing I'm quoting you tomorrow or even later this afternoon. So it is a very fluid situation. So as I always say, Amy and I are happy to have a conversation with you about your situation, about what you're looking to purchase, what interest rates are doing for you specifically. We're also, of course, here to work on your pre-approval. If you're looking to refinance, you're going to be on hold for a little while. I was really getting hopeful that we were getting close last Friday to where refinancing might start making sense to a lot of people, but nope. With this tariff news, we are seeing rates just at a level they're not going to make sense for hardly anybody to refinance. So, well, on the bright side, we're actually quite busy. There are people out there buying homes. We're seeing lots of contracts. I got a contract today from a client. So people are, despite what's happening in the market, home prices should be staying steady. And there are people out there buying houses. We're in the spring. We're coming into the summer. It is going to be busy. And sometimes you just have to buy a house no matter what interest rates are doing. Well, let us know how we can help you. Have a great day. Bye.